Where do you see us heading with offices? And I'm right in the middle of New York City. So this is kind of the epicenter of what was difficulty, but seems to be back.
Yeah, absolutely. So I think, the big story of 2025 so far, 5 years post-pandemic, 5 years post the reset, and demand is back, particularly in places like New York City. It's back at pre-pandemic levels. It's the same in San Francisco as well, and many other large gateway cities across the country. So from an office perspective, it's much more optimistic than it was. But as you kind of referenced, it really depends on the type of asset you're talking about and the specific location, because not every story is the same in commercial real estate.
Well, I want to talk, and forgive me for being centered to New York, because there
It's
are a couple
okay.
issues here. But this building's got to be 80 years old. Our office is somewhat modern. Next to us is a huge portion of the floor, which was empty, has been renovated, is being upgraded. Are we seeing that in the office space, not only in New York City, but in other places, an upgrade of existing infrastructure? Is it better to just start out new and go in all new?
Well, I mean, let's start with what's happening in the trophy market. The trophy market's been performing exceptionally well, as you've probably read about. There's a lot of headlines around that, and especially post 2019 construction. So, post 2019 construction in every major city, particularly New York, performing excellently. But there's a lot of opportunity in the real estate market, especially as demand's coming back for assets like the one you're in that are just going to require a little bit of repositioning. And we're seeing some really large demand for that too. I mean, especially it looks like you're in a pretty creative space. That's usually pretty popular with the technology industry. And the technology industry went from being, about 12% of the total US demand to almost 20% in the last year. So that's one of the categories where we're seeing a lot of growth is tech demand again. And that's going to be a good thing for buildings that are more creative and need a little bit of a renovation.
And are you seeing, this is a big topic in New York City, but I think the headline was that in 2026, 40% of companies are going to have a mandatory return to office
Yeah.
policy. Is that the right figure? And is that driving part of this upswing?
That sounds like it's part of it. I mean, I think it's just really it's behavior at the end of the day. Like, when you're going to the gym and then you stop going to the gym for a couple of weeks and then you start going back, it takes you a while to get a new habit. And I think what that's really nodding to is that we're 5 years past this big reset that we had to all work from home because it was necessary at that point in time. And now it's just like, what's our new behavior? And we should be in that. So I think, look, the office is a great place for collaboration and innovation. And I think particularly businesses that are trying to do transformation in the face of AI and economic changes that are happening right now, it's good for people to be face to face.
I want to switch to some other sectors within real estate, but before I go there, and if you're not comfortable talking politics, don't.
It's
And I'm
okay.
not asking you to take a political stance, but there is a candidate in New York City who very well could win, is talking about raising taxes on one of the biggest revenue generators, which is commercial real estate. Look, revenue taxes are 29 billion a year. It's the
Yeah.
largest single generator of revenue, real estate taxes, in New York City. And there's a discussion about raising taxes. What would that do to this revival of the at least commercial real estate market?
I think there's a couple important points here. The first is that real estate is a highly local business for the most part. It's very important to think about. So when you think about what's going to happen in your commercial real estate market, interest rates definitely are one of the major factors, but what's happening at a local level from a planning perspective and a tax perspective is exceptionally important as it relates to attracting business and retaining business. I think, some cities you could look at is what happened in San Francisco. We had a very similar tax policy that was implemented right before the pandemic in about 2018 and 19, where there was a commercial real estate tax on rents. And, it did lead to several companies leaving the city that have not yet returned. So does that mean there won't be a next generation of business in another cycle? Of course not. Business is resilient. It has other chapters, but it's certainly, I would look at other cities for a nod of what you could expect if that happened. And it's not always a great result, as you'll see.
Did I hear repeatedly? I interviewed someone just the other day who said, look, you can throw a lot of bad words at New York City, but it always comes back. There's only one New York. Do you agree with that? Or look, what we saw what happened in San Francisco. I'm from Miami, Florida originally. I go down there to visit my folks and I am blown away. The Miami of my youth is a sleepy, forgotten backwater God's waiting room.
Yeah,
Retirees, that's where they went. Today it is the hottest place, not temperature wise.
that too, though.
Yeah.
Look, I think San Francisco and New York are incredibly resilient because of the demand that they have that is going through there, the financial services industry, the technology industry, and that does make them more resilient. With that said, You're correct. Like the fundamentals have changed, right? Talent has redistributed. So the big question is where's that talent going to live and how are they going to be employed and what businesses are going to be growing there. So I think both things can be true at the same time, that San Francisco and New York are incredibly resilient, but that doesn't mean they won't suffer if there's certain policies that are going to be pushing business away or that they won't benefit if business is coming in from a commercial real estate perspective.
Okay, I've got more than a few years on you. I grew up in mall culture. I'm Gen X. It's
Yeah.
all about the malls. They made movies about the malls.
Well,
And
let's
then,
talk about malls then, because Class A malls are performing very well.
are they
So,
really? I thought
yes.
malls were dead. I thought it was over.
No, not all malls are dead. Just, certain malls may be having a harder repositioning up ahead of them. But in general, this is where that one size fits all doesn't really work in commercial real estate because Class A malls, people like going to the malls. I mean, you and I probably went a lot when we were younger. And guess what? There's another generation of people who does too. And really, I mean, being in person is a great opportunity from a shopping experience to lean into experiential retail, but also pretty convenient to get those returns if something didn't fit right.
I'm thinking about two experiences with malls. One from when I lived in Cleveland, Ohio, and even then, I mean, malls were not dead, but we had dead malls in Cleveland.
Yes.
But then I'm thinking about a mall in downtown Chicago, which was always just packed and crowded. It's the water tower.
Oh, I don't know that one.
It is. It was the. I think Bette Midler did a movie there in the 1980s. That's how old I am. But I think it's empty, and it's downtown Chicago. Don't get me wrong, but is anyone building a mall anymore? I mean, where does an investor? Is there opportunity in that space, or should you be looking at like these old buildings, these trophy buildings, and refurbishing them?
I mean, every investor is going to have a different set of priorities and a different geographics. It's hard to say it as a broad stroke, but what I would say is like when I look at it, is like where's the demand going to be, and that's where the opportunities are. And there's certainly demand for Class A malls, and there's certainly demand for good office too.
If you were going to write my story, what's the headline you would like to see?
Ooh, that's an interesting one. I think there's probably something around like, 5 years post pandemic, commercial real estate is showing resiliency as it defines a new chapter or something along those lines. Because, I've said this a couple times, but I feel like 2020 was kind of an Etch A Sketch moment. Do you remember that game as a kid?
Oh yeah,
Where
of
you kind of
course.
drew it all and
Yeah,
it was just the
you
way you
shake it.
thought.
Yeah.
Yeah, so you spent the first 15 years of your career kind of making sure you knew where all the knobs and dials are to do the right thing. And then an event happened that just shook it out, right? And then, okay, got to redraw this thing a little bit. And there was a little bit of that happened in a lot of different industries during the pandemic era. But I think we've redefined that new chapter and that there's a lot of opportunity ahead. And I think that, we're in a new era now. We've got to figure out how to navigate it and how to take advantage of the opportunities.
I would imagine that a lot of the venture capital folk, those people, they eat, sleep, and breathe ups and downs. It's their diet. There are going to be opportunities in places like New York, San Francisco to buy properties. Is it too soon to decide whether they should be going in? I mean, the Saudis, the big story in the Wall Street Journal just the other day, the Saudis are about to plop $1 billion into New York City for an office skyscraper in New York City.
Well, I think there is a lot of foreign investment that's been coming into the market in the U.S., especially in the past year, and there are opportunities. And I don't think that the opportunities are slowing down, but I think they really started about a year and a half, 2 years ago, right? We had some certainty that things were improving at that point, and there certainly were a couple investors who are early movers that I think will be taking advantage of that and having a great return in a couple years when they're able to exit.